how strong this market. Hello, traders. How are you? Orlando here. Let's have a look at what we have for the open. I'm going to go through gold and the US dollar Japanese yen, which is the two markets that I trade. Now, let's start with gold. Gold has been on a rally in the past few days at the end of the week. Um, from the lows of the week to the highs of the week, gold has rallied about 4,000 pips. That's an insane. So, what are the levels that I'm looking? Well, let me show you. So, basically, the first level that I'm looking at is this high right here, right? This is the high that I'm looking at. Gold closed near that high. Let's see if it actually broke with it. Of course not. It did not. So, that's a main level that I'm looking at, guys. Main level that I'm looking at. Now, let's have a look to a lower time frame. Let's go to the hourly chart. Not too much going on the hourly chart, and on the 15-minute either. Right. So basically, let's go back to the 4 hour chart and let's have a look at what I can actually pinpoint for you guys. So basically, because of how strong this market has been, I'm not looking for shorts at all. The only short that I would, in fact, be looking for is if gold opens again super strong and price breaks with the high, right? This is the 43. Let's have a look, 43.84 level. This is the 43.84. So basically, if we go, if we go to a lower time frame, it's going to be very hard to pinpoint that level. We'll close about 400 pips from that level. So I'm looking for those shorts, right? Price failing from that level. So what I want is, or what I want to see in order for me to be able to trade is gold rallying at the open, um, buyers here failing to keep price above that 43.84 level, and then sellers taking control of the market. That shift in momentum, that would be very nice and a very good price failure. Anything below these previous lows, the last lows that printed at the end of the New York session would be an entry short for me around the 43.27 level. So basically, I'm looking for that those price failures of gold failing from that high, from that 4 hour high, and coming back down. My targets would be, in fact, possibly this structure lows. That would give me a possible target for about 1,000 pips. Now, I can't tell you how much the risk would be in this possible trade because price failures has not occurred just yet. But yeah, probably we'll be looking at the very low time frames for these guys. There's not too much going on in this market. Again, super strong, and the only way that I would short if is I see the price failure above 43.84. Now, that's scenario number one. Scenario number two is gold opens a little bit weaker and we have a break of the structure. Right, a break of the structure without price failing here would not give me a short opportunity. In fact, it's the other way around, complete opposite, guys. I would be looking for longs should gold open um, weak, right? Right at the open, possibly. Sellers taking control or aggressive seller jumping into the market failing to keep price below the structure low and buyers taking control, that would give me a price failure below the 43,000 level. So that's a very good level round number. And here's where I will be looking for longs. Now, let me just delete everything right now, guys. And yeah, let's put on some lines here. So those are the two levels that I'm at. Right now, sorry for that. If those are the two levels that I'm looking at, we're going to go to the very low time frames. 5 minute chart, etc. So basically, this is, I mean, just have a look at how strong close was, right? A ton of buyers in the close positions, positioning themselves for a strong open. Now, that tells me something, right? Why would anybody buy gold at the close, near the close, right? It's because they're expecting maybe a gap up, maybe insiders or, or just loading up on gold buys. This is pure speculation, guys. I clearly do not know what's going on. Um, I can't tell you with certainty why we had such a strong buy at the close, but well, when that happens, normally we are going to see price open higher with a gap up, right? This tells me, this is this volume at the close, right? This buying volume at the close is not typical. So, yeah, having said that, gold opens with sellers immediately. Push price now below this low. I will be looking for longs from sellers telling to keep price down below this low and buyers taking control. Right? That would give me a price failure, set up long, and yeah, I will be targeting this zone around the 43, um, 40 level, maybe for a push higher. Given the fact that we had so much buying volume at the close in this market. Now, not too much going on, like I told you, on gold. But again, those are the two scenarios that I am looking at. Now, let's have a look at the US dollar Japanese yen. Now, the US dollar Japanese yen, let me show you first, as you can see, was at all-time highs, which means that the Japanese yen was at all-time lows against the US dollar. Now we had a massive bearish uh, bar here, two bars here on the daily, from high to low. That was an 8,000 pip level. Yeah, an 800 pip move to the downside. Now, I was reading, Neil was telling me also that the US dollar, the United States is quite invested in keeping the Japanese yen price higher, right? I don't know the macroeconomics behind it, but this looks like a massive intervention. Now, from the hourly chart, I wouldn't be looking for loans in this market. The reason is because just by looking at these hourly charts, sellers are in complete control of this market right here. As you can see, when this massive pushes down ends, right, we have shallow, very shallow pullback. So this is a sell the rally scenario, and what I'm looking for is that, in fact, selling the US dollar Japanese yen at the open. Well, not quite so, right? In the sense that I'm not going to blindly sell the US dollar Japanese yen at the open just because I think that's not going to happen. No, I need to see what I'm about to tell you, right? So on the 50-minute chart, right, let's go back to the hourly. Now, this is the high of that 2 day, right? And again, if you notice, massive selling volume in the close, right? Well, not at the close, you know, after, um, after midday New York, which is unusual again, unusual. So we clearly had a price failure being these lows. Let me show you how that looked. I'm just going to put on again a line on my charts, going to the 5 minute chart, just to show you, right? Sellers pushing price down, boom, breaking with that low that I showed you on the hourly, failing to keep those keeping price down, buyers taking control, right, and a massive push up. So that's basically a price failure. I didn't take the trade, of course. I was not in front of my screens. I wouldn't have taken it anyways. But what I'm interested in is if if sellers are going to be present at the open, right? Given the fact, again, we had this massive bearish volume or selling volume near the close or in the afternoon, right? Which again is quite unusual. So, if I were to look for longs, two levels that are very, very interesting to me. The first one is these last highs created at the end of the New York session. So, well, this is very close to where price closed. So, I would assume, okay, I would expect that this is not going to play out in the sense that we might gap up or gap down. Um, but the ultimate level that I'm looking at, going back to the hourly chart, let me just delete that, is that pullback high. Let me just zoom in a little bit. That pullback high, this pullback high, you're going to see sellers in control, pullback, sellers in control. This is another pullback, sellers in control. So I would be looking for price failing from these highs to take this down again. So buyers showing up at the open, failing to keep price above that pullback high, and buyers failing to keep price above that pullback high. Sellers immediately showing up. That shift in momentum gives me a price failure setup for shorts. That would be the best scenario. That would be the best scenario in the US dollar Japanese yen. Now, again, we are quite away from that level, about 80 pips or so. Um, 80 pips or so. And again, if buyers show up at the open and we break with this high and this high is very important to why? Because this is the high that created this liquidation, right? That created this massive move. So again, here is where big sellers showed up, at the end or the afternoon of Friday's New York session. So if buyers show up at the open and break with this high, I don't know if I would like a short in the sense that here this level is super key, right? Possibly we're going to see sellers show up again here at the same level that we saw them jump in on Friday. And if buyers break with that level, that means that sellers are no longer in control, and a price failure from the pullback highs would be a little bit risky. So, yeah, I mean, I know I told you that possibly I was looking for price failures from that pullback high, but now that I talked me into analyzing the structure in this market, possibly not, possibly. So, the true level that I will be looking for price failures is the last high created at the end of the New York session. Why? The reason is because if this high remains intact, right, sellers remain in control and possibly buyers will fail here for another short. So that's me, guys. That's what I have. These are the only two markets that I trade. Remember, than the US dollar, Japanese yen. So I wish everybody a great trading week and trade safe, manage your risk accordingly. And yeah, I'll see you again.